question 2. No, wait, let's start again. Lab 4, question 2. This is the section 3 question. All right, everyone's favorite style of question. So here we are, we can see lab 4, question 2. Whenever I see a question that has a fair bit of writing, I always think it's a good idea to take a look at the required first. So let's do that. Required 1, using proper section 3 format, calculate the taxable income for Miss Braganza. And indicate any loss carryovers. And requirement 2, I'm going to let you do requirement 2 on your own. But of course, as always, we'll post solutions. And if you have any questions, just let us know. It'll be pretty similar to what we did in a previous video with respect to tax credits and 3 different cases. So let's get back to required 1 and go through the details of the question. Karen Braganza is a 39-year-old employee of AHA Incorporated, a Canadian company that is publicly traded, typo, on the TSX. The following information pertains to Miss Braganza for 2020. Salary of $120,000, and she had the full amounts of CPP and EI withheld for the year. So because we are doing a section 3 question, if I was a student, I would probably start making notes somewhere. And I am going to say that, well, this is going to be a subdivision A consideration. Her employer provided her with a vehicle that she was required to use for work. AHA's internal accountant correctly calculated the standby charge. Thank you, AHA's internal accountant. What a time saver. To be $3,250 and the operating cost benefit to be $1,625. So I think we'll just take a look at that. Maybe give that a little highlight. And if you are keeping up, and of course you are, that's also a subdivision A consideration. She received a loan at the beginning of the year from AHA for $250,000 at 1%. So there we have the principal amount of the loan, and we have the contractual rate on the loan, which she used to purchase a luxury catamaran. I genuinely don't know if I've ever heard that word before. Catamaran? Catamaran. 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 Aha. Anyways, that aside, assume the prescribed rates are 3%, 3%, 2%, and 4% for the year. Karen pays interest at the end of the year. That's important. So it looks to me right away that the contractual rate on the loan is less than the prescribed rates for all quarters in the year. This means that there's definitely going to be an employee loan benefit. The employee is benefiting from getting a rate of interest that they probably could not have gotten otherwise in this fictitious scenario, which means you'll have to calculate some sort of loan benefit, and you would put that into subdivision A. Next, she exercised 500 stock options at a price of $20 per share during the year when the shares were trading at $25 a share. She was granted 3,000 options when the shares were trading at $18 a share. So that to me looks like the exercise price is $20 per share. The grant price was $18 a share, which means you would not exercise a $20 option if the market price was $18 at the time. So these shares were granted, or these stock options, I should say, were granted out of the money. Out of the money! Sorry. Okay, and their shares were trading at $25 per share when they were finally exercised. So the taxpayer is going to have to deal with this, and once again, that will be a subdivision A item. Moving on. She attended several speed dating sessions, good for her, and posted her profile on a popular dating app, but Miss Braganza is single. and she's happy with that. Good for her. You do you. You don't need somebody else to make you happy in life. In fact, you know what? That's a good time to pause. Like, good for Miss Braganza for just being happy with who she is and what she is. You don't need somebody else to make you happy. You know, I've always thought if we rely on externalities to make us happy, that eventually we're just going to run out of external things to look for to fill this void. It's a lot better, actually, to fill yourself from within with joy. It gives her more time to spend with her 70-year-old mother who lives with her. Her mother has no income. Karen had started up a cosmetic distribution business which lost $5,075 during the year. That is a loss. It is a business loss. So that will be a subdivision B item. But remember, we've got to put things in the right spot. So where's that going to go? It's going to go into 3D subdivision B. Please don't forget that. Karen also had rental property where revenues were 24,000, expenses were 10,000. We can look at that right now. I'm pretty sure that's going to net, right, to, in fact, why don't I just add some stuff to this? Is going to net to 14,000. Did that math all by myself in my mind. And that'll be a subdivision B item. Next, Karen sold 200 shares she owned in TELUS for $45. She had originally purchased 300 shares for $39. Okay, tiny little gain there, little gain. And this is a capital transaction, so that would be dealt with in subdivision C. Now let's get to answering this. Using proper Section 3 format, calculate taxable income for Miss Braganza. Miss Braganza, and indicate any loss carryovers. I think we're done with this. We'll navigate over to the spreadsheet. Okay, let's get to it. You'll see I've got the question over on the right with all of our little notes that I've taken there, and we're going to try to answer it over on the left. We know that we have to start with 3A, but I would say that when we went through it and we started to identify subdivision A items for employment, we identified a whole bunch of things. Here's a sub A, and here's another one, and here's another one, and here's another one. So with questions like this, there are different ways to go about it. I suggest actually showing your work somewhere else, maybe near the bottom. I'll just make some notes here. So maybe I'll say note 1. And I'll start to tabulate everything here that's going to go into subdivision A. So for example, that first bullet point was the salary, right? And that salary was $120,000, no problem. The second bullet point, it was the standby charge of $32.50 plus $16.25 for the operating expense benefit. So we'll just put the standby charge there. And the operating benefit of $16.25. Next would be, in terms of these bullets, if we're going in order, the next one I see here is this one, which was the employee loan. So we can put a placeholder here for employee loan. But as you know, we need to do a calculation. So I'm just going to go even further down and start up a calculation for this. So we'll take the principal amount of the loan. It's $250,000. And Q1 was 3%. Let's do this 4 times. Q2, it says, was 3% as well. And then it was 2% and 2%. We're doing this on a quarter by quarter basis. Okay, so I've got total imputed interest, which is the word we use for that, is 6250. Now, don't forget, it did say that Karen pays interest at the end of the year, and the contractual rate, it was 250,000 times 1%. So we can say paid interest. Actually, let me retype that. Let's say less interest paid. And that we can calculate as 250,000 times 0.01. And so the benefit's going to be 3750. 3750 is essentially the amount that the taxpayer is benefiting by getting this loan through their employer as opposed to having to get the loan some other way. And then if we keep going here, she exercised stock option benefits, right? So we know that the stock option benefit is going to be the next one, stock option benefit, but I don't know the amount just yet. And you know what? We should also show that because the employee loan, the 3750, was actually calculated as a result of what I called note 2, it's really important that I indicate that for a marker so they can see just how I got it. And I think this would be a good time to create a note 3 to deal with the stock option benefit. So this would be equal to the market value at time the options were exercised, which was $25 if I'm not mistaken. And we could subtract the exercise price. And we'll get $5 and we multiply that by the number of shares. So times the number of times that by the number of shares, which was, if we go to the question, 500. Okay, so these options look like they're 1-to-1, one option per share. And there we have it. That would be the stock option benefit of $2,500. So we can go back up here and input the stock option benefit as so. And I'll say that that was calculated in note 3. Going through the question, we can see that we are done with subdivision A items. So we can total that up. Get 131,125. That's our total subdivision A amount. So we can go back to the top and actually input something into what we were creating here. 3A subdivision A employment income is 131,125. I just noticed now that I've got decimals. We don't really need that for what we're doing, so I can just do it that way. Okay, now we should go through and look for subdivision B items. And we can see that the first subdivision B item from our notes was she started up a cosmetic distribution business which had a loss. So that is subdivision B, but it doesn't go up here. That goes into 3D as in Delta. We go to the next one and we can see Karen also had a rental property. So there's some property income or rental income. So we can say subdivision B rental. And that was 14,000. And we should show how we got that. So since I'm using notes, I'll just go down and make another one. And we could say the revenues were 24,000, expenses were 10,000, and we have rental income. Perfect, 14,000. We can go here. That's 14,000. I don't see anything else. I don't see any subdivision D items. So now we can go straight to 3B. And this, recall, is where we deal with subdivision C, taxable capital gains. And we do have an instance here. We have one time where we mark subdivision C. Karen sold 200 shares she owned in TELUS for $45. She had originally purchased 300 for $39. Again, we're using notes. So we can go and make a note for this. Note 5. And I can just say, Note 5 will be the proceeds of disposition. We'll subtract the adjusted cost base, and we'll multiply that by 200 because there were 200 shares. If we were to do that math and just take $45 and subtract $39, multiply that by 200, what would we get? $1,200. That's our capital gain, right? That's at 100%, so we should be multiplying that by 1/2. And if we multiply this by 1/2, we end up with getting $600 is our taxable capital gain. Go back up here, we could say our taxable capital gain was $600. Our subdivision C allowable capital loss, we did not have an allowable capital loss in this question. That makes this easy. And so our 3B subtotal is $600. Now we should subtotal both of these amounts. We should subtotal 3A and 3B. And if we do that, get 145,725. Next, we look to 3C, where we have our subdivision E deductions. And I don't believe we had any to speak of in this question, so nothing to do there. We should, however, have yet another subtotal after that step, and it'll be the same amount, 145,725. Next, we can move on to 3D, and I do recall there was something. Yes, Karen started up the cosmetic distribution business, which had a loss of $5,075. So we can go subdivision B, business loss, $5,075. And we can subtotal all of this. Looks like we're going to end up with a positive amount, so that'll go to 3E NITP. Okay, so we've calculated NITP, and I said I was just going to do requirement 1, but we're not done yet. I think first, before I go any further, we should take a quick look to make sure our formatting is correct. I can see that we've got 3A followed by B, C, D, and E. Looks like I've got stuff in the right place. But you know what? One thing that I can see that I've done here that I should not have, but still time to fix, is I'm not indicating where I got this number from, right? So if you'll recall, this came from note 1 that we created. The rental income came from note 4. Right down here is where we had the rental income, and the taxable capital gain came from note 5. So we should really go back and just tidy some of that up. Here's note 4. Here's note 5. That's nice and neat, and someone could follow that. Now, still, we're asked to calculate taxable income, and we haven't done that. We calculated NITP. So to get from NITP to taxable income, we have to subtract some things. So less our Division C deductions. And the way I think of Division C deductions really is I think, was there a non-capital loss from another year we can apply? Not that we can see. Is there a net capital loss from another year we can apply? Again, not that I can see. There was a stock option benefit that was part of employment income, right? If we scroll down, we can see stock option benefit was $2,500. And we know that those shares were issued to the taxpayer. Sorry, not the shares. The options were made available to the taxpayer out of the money. And AHA Incorporated is a Canadian company that is publicly traded. So if it's out of the money, I do believe the taxpayer has the opportunity to take a small deduction there for 1/2 the amount. And that would be from ITA 110, subsection 1, paragraph D, as in Delta. So we could just say note 6. This was a public company that granted options out of the money. Out of the money, I'll just put that in quotes. And we'll do the math. So I know that the stock option benefit amount was here, $2,500. So we could take the stock option benefit, which was 2,500, and we can multiply that by 1/2. Get 1,250. So that would be our 110(1)D deduction. Make it very clear where I got that amount from. And once we have NITP, we have all of our Division C deductions. The only thing that's left then is to say, what is taxable income? And oh, don't know what I clicked there. Remember, that's a loss. That should be negative. So there we go. Okay. Maybe I clicked the wrong button there, but I think that's been corrected. So NITP is 140,650. Division C deductions are 1,250. Taxable income is 139,400. Okay, everyone, so I'm going to leave part 2 for you to do. Again, solutions will be posted. You'll find part 2 to be quite similar to what we did in prior questions, for which videos are already posted. If you have any questions, let us know. Otherwise, thanks for watching, and we'll see you next time.